Hello, hello. Good afternoon, everyone. How are we doing today? Hope everyone is well. If I could get a quick mic check and make sure that we are seeing, right now it's Euro, and just make sure you guys can see the chart. All good? All right, awesome. Thanks, Curtis. Thanks, Ahmed. Thanks, Faisal. Amy Moore, thank you. Hello. All right, what's going on, everyone? So it sounds like everything's coming through all right. So looking forward to another week in the markets, business as usual. So again, quick introduction. I know we have quite a few new people in the community and joining us here this Sunday. So my name is Dylan Richards. I'm a professional futures trader. I specialize in the futures market. While I do trade other instruments, the futures market is what I specialize in. So what I do here is I share my intermarket analysis, what I'm expecting throughout this week in a myriad of assets, qualifying it using intermarket analysis. And so, yeah, straight into the point, that's what it is we do. And last thing I had to touch on, economic calendar. So yeah, we'll go ahead and get into that. Let me go ahead and introduce Salwan. Hello, hello. Momentum Trader. Hello. Anita. Hello. Christopher, what's up, fam? Hope you're doing good, brother. Denisha, glad to have you. Christopher, what's going on, my man? David Vega. Hey, everyone. Hope y'all are having a good day. Appreciate you joining us, David. Good to have you, my man. Olawale, happy Sunday. Ahmed, good day. Glad to be back with the best in the game. Awesome. I appreciate that. Glad to have you. Anita, hit that like button, y'all. Absolutely. That helps us out here greatly. JIS, hello, hello. Ahmed, crazy week ahead with all the red folder news. Definitely. I'm expecting quite a bit of animation and volatility this week for sure. Colin, good evening. Michael, hello. Moralitos, hello, hello. Joe, hello. Dylan and family, hello. Awesome, all is good. Hey, Christopher, thank you very much for the donation. The appreciation is very much appreciated. Thanks, my man. Kieran, geez, I remember when we were we were live, 50 viewers was a lot. Yeah, definitely, we're growing. And the cool thing is it's all organic. Don't even have to put money into marketing. I guess if you're providing value, word spreads quick. Rich Carey, happy Sunday, Professor. Looking forward to another great analysis. Awesome, Rich. Glad to have you. Earl Garrison, my man. Appreciate the support, brother. Appreciation means a lot, my man. HS, what's up, brother? Hope you're doing good. Christian, another Sunday. Let's go. Hello from Frankfurt. Hello, hello. James. Hola. Miha, I really like your videos. They help a lot. Awesome. Glad to hear that. All right. Crypto Spartan, first live from Mexico, sharing with friends. Awesome, Crypto. Appreciate that. All right, guys. Well, without any further ado, let's go ahead and get into it. Again, I'm going to go ahead and cover the economic calendar because, again, everything I am sharing is what I am doing. Again, I'm risking live capital in these markets. I am looking to take advantage of opportunities, but I'm also having to weigh the risk to reward factor. So I'm constantly having to measure, is this a low risk, high probability condition? And all those things are things that I'm having to factor whenever I'm going into my trading before I go into each trading day. So I'm going to go ahead and give you guys a little bit of insight with regard to that before we get into the technicals themselves. So we do have non-farm payroll week ahead of us, and we are closing out a month, transitioning into the following month. So that can create a little more difficult price action because, as we know, in the end and transitioning into a new month, we enter new phases of accumulation, manipulation, distribution. And then also considering the economic calendar, again, we have non-farm payroll. So my protocol for non-farm payroll, as many of you guys know, I'm trading Monday through Wednesday. And then after that, I don't have any interest in touching the market until after the non-farm payroll release. And then I'll let about 30, 45 minutes, maybe the full hour, depending on the clarity that I have or that I'm still trying to determine. And then that's when I'll look to potentially take trades after non-farm payroll. But most of the time after Wednesday, it's just a long weekend for me. I'm not terribly interested in pushing it. And what I do with that time, I was getting a lot of questions. So, you're a full-time trader. What do you do when you're not trading? And that's a good question. what I'm doing is I'm refining my edge. So I always use non-farm payroll weeks, the Wednesday afternoon, Thursday, and Friday to refine. So because non-farm payroll is typically at the beginning of the following month, I utilize that time to review the previous month. What did we see in price action? How did I trade with regard to what I was expecting? Did I follow my rules? How can I refine my model? And again, just a continuous process of studying, refining, and improving. So I do typically use that time because I'm not interested in risking money in conditions that aren't high probability. So I'll use that time in a productive way to improve my edge, study, and improve as a trader. So that's what I do with that time. I take that opportunity to backtest, grow, and do some studying on that end. So that's what I'm doing with my time outside the charts. And then again, got to take some time off the screens completely and do some reading, do some shooting some hoops, and doing things off the charts as well. So that's what I'll be doing next week, taking it easy. And then again, considering everything we have going on in the world right now with WAR in the Middle East, I'm expecting all those things to intensify, unfortunately. But as traders, as much as I don't want to talk about those specific topics or bring that into the discussion, as speculators, as market participants, those reverberations are felt in this industry and business as well. So it's something that cannot be shied away from or neglected. So you do have to understand the current state of events, what's going on, because market makers, they use that sentiment in price delivery. So again, I'll cover some of the details with regard to that as we go through the session. But again, keep in mind everything that's going on. That's why I'm pushing very light risk. I'm not interested in placing heavy-handed bets in these markets at this time because of everything we're seeing. So with all that preamble out of the way, now that we got through the introduction, again, let's go ahead and get into the analysis for this week. So starting with the monthly chart here for dollar. Again, you guys know we've been bullish. We've been calling this market higher. To the specific levels on the monthly chart, looking at this in efficiency, we broke this in half to get a midpoint. And that's what I was favoring as a draw. I wanted to see the market expand up into that. We've been in a consolidation for dollar, and then we'll touch on that in the lower time frames. And I'll also give some reason and some logic as to why I haven't been interested in the Forex market. You guys know, what was I calling this week? S&P and NASDAQ. I didn't care what dollar did, euro, pound, because they weren't likely to move. And then I'll go into some factors that told me why those markets weren't going to move and why I wasn't calling them. So general rule of thumb, if there's usually a market I'm calling and I'm all over and I'm not calling it, there's probably a reason for that. So again, I'll go into some of those details there. But back to the monthly chart, still expecting bullish expansion higher. Nothing's changed my long-term outlook on dollar. I still expect dollar to eventually reprice up into the 115s longer term. So that's what I'm looking for on a monthly chart. And again, nothing's changed my stance. All right, so weekly chart. All right, so weekly for dollar index. So again, bullish order flow. We've had a crazy run higher with really no down days or retracements at all. So once we delivered above this high here, and again, I covered all the narrative as to why we would do that. Market traded below these equal lows here. What was occurring there? Smart money is buying the sell stops. So breakout artists, fund managers, they're trapped short, expecting the dollar to crater, as that was the narrative the mainstream was pushing, saying, you know, the dollar's in trouble, all those things. And again, they just manipulate people using sentiment. We don't care about the news. I don't care about fundamentals. Fundamentals in the sense outside the charts. Again, fundamentals using bonds, interest rates, all those things are salient. But when we're talking about things like balance sheets or company earnings, stuff like that, that has no bearing on what these markets are doing. So I'm cutting out all the noise and I'm taking you guys straight to the point and what these markets are doing and what they're doing it based off of. And this is what it's doing. Trades below these lows. Smart money is now net long buying these stops. So where are they going to reprice it? If you're a buyer of a market and you need to sell to cover that position, well, you want to buy it in a discount, and then where you want to sell it? In a premium. So you're going to want to sell it above these highs here and here, where there's willing buyers. So there's willing buyers at an expensive price. Why? Every retail trader that sold short, where's their stop? Above this high here or here. And then the market careens into those levels. for smart money to offset distribute the positions that were accumulated down here. So again, just a brief rundown on what we've been seeing, the context, and why we repriced at these levels. And now I'm going into why we saw this consolidation, because we already saw a nice run higher. So it's reasonable for the market to enter a measure of consolidation. Further confirming this is seeing the gold market. We see gold has been flying based off everything that's going on around the world. So that is going to not put pressure on dollar, but they can't keep going. What's the word I'm looking for? Diametrically opposed markets can't keep going in the same direction long term. One is going to have to bend the knee, and in this case, because gold is flying, because the safe haven asset, investors, fund managers, they want to invest into safe assets. So that money is pouring into the gold market. And as a result of that, we're seeing that they're holding dollar and not permitting it to trade higher, again, because of those intermarket relationships. So touching on the weekly chart real quick, I'm still bullish. I still like this swing high in here. And then through that, I like the remaining inefficiency here. So again, covering those same levels the past few months, nothing's changed. But again, we have entered a measure of consolidation. I do like how this inefficiency here, look at the bodies, all respecting that. So again, wicks can do the damage. They can color outside the lines. I took our attention to this discount inefficiency last week. And I said that once we traded into this level, the market would have to decisively show me it's bullish. And then after taking out the swing low, so there's stops below that low, they're taken out. Who assumed that long position? Smart money. And then the market is off to the races again. So again, still seeing higher prices on dollar. Nothing's changed that perspective. And as long as we remain above this purple fair value gap, I will continue bullish on dollar. So covered my targets on the weekly. All right, let's drop down into the daily and get you guys through this. So swing low, market traded below that, taking out the trailed stop losses. So as soon as we traded lower, created a low, the market ran off that. Everyone's looking to jam their stop loss up above the most recent swing low. So smart money's going to run on that, trade below those lows, absorb those stop losses, trading into the weekly fair value gap, and then the market's off to the races. What day are we making that low of the week? If we're bullish, and again, is this contrived? Is this anything that, again, I'm just pulling out of a hat? Absolutely not. You guys understand the logic here remains the same. If we're bullish, when do we expect the low of the week? Tuesday. Why is that? Because Monday we open, drop lower. Retail has no idea what they're looking at. They're just reacting to the market. So what are they doing? They're saying, wow, the market's really weak. It's dropping. We just took out a low. That's key support. So retail is trapped in, and then the market takes out these equal highs, dragging them out of the market by their hair. And then we create an inefficiency on that upside move. So this low is significant to me now. I want to see this become an intermediate term low. I would not want to see the market get below this level. Why? Because it already took out stops. So the damage was done here. And then again, we see a little 3 drives pattern. Not that I'm trading the patterns for pattern's sake, but it gives me narrative. Because again, anyone that was still long that is jamming the stop loss higher has been stopped out of the market. Now the market will be permitted to reprice higher, in my opinion. But again, that depends on what the gold market's doing and world events. So again, with this low being an invalidation level, I wouldn't want us to get below that. Bullish order block in here, trade lower, the rotation higher, change in state of delivery. So we open, trade lower, hit that opening price, trade higher. What day do we make the high of the week? Thursday. We typically expect the opposing range to be capped Thursday into Friday. So then we saw that, and then we pulled back into the range. But what I do want to take our attention to is the bullish signatures that we're seeing. So again, I like how we traded through this swing high. So we've got a shift in market structure after taking stops. This fair value gap here, this huge BISI, buy side imbalance, sell side inefficiency, extending that midpoint through. Look at the sensitivity at that consequent encroachment. Look at the bodies closing here and here. I like to see that. That's a bullish signature that confirms to me that this market is bullish. So looking at this purple fair value gap here, I would want to see the market stay above that. We can stab into this bullish order block once more, and that would be permissible, but we have to rally from these levels here. So again, we should not get below the bullish order block. I want to see the market rally from here. And then what targets would I have? Previous week's high would be a good first target. I like this external range liquidity here at the 107s as a second target for this week. And then through that, my interest lies in the 107.993, which is a level on the weekly and daily chart that we have covered. So again, still looking for higher prices on dollar. Nothing's changed my stance here. So we will still be risk off, which means lower foreign currency and lower stock indices. Unless something abrupt happens, my stance will remain the same longer term. And as you guys know, I've held this stance for months. Ever since we left the really transitioning into the fall months from summer, you guys know I've been a raging bull on dollar. And again, what does that give me in terms of a bias in other assets? Obviously bearish currency or foreign currency and bearish stock market. And again, we've been all over that like white on rice. And this is what allows me to confirm those things. So that's it for dollar. Let's go into the bond market, and then I'll touch on euro briefly. But let's go up to the monthly chart for T-bonds. And again, I'm going to reiterate something that I already covered, but I'll share that again here. I know we have quite a few new people. All right, so T-bond market. Again, you guys know I use this to qualify what I'm seeing in the currency market. So I'm validating this in for currencies. So if I want to see dollar higher, I want to see T-bonds sell off. Why? Because look at the yields. So yields are ripping higher. So this is the United States interest rates, and they are skyrocketing. So because of that, we expect the dollar to do what? Be repriced higher along with that. Why? Because all fund managers are doing is seeking yield. Wherever the most yield is at, that's where money is pouring into. And right now it's the dollar, which is why we're seeing the yields rally. So that's going to put strength in dollar to also chase these yields as well. So on the interest rates themselves, I'm still looking at higher prices. I like these equal highs here for the 30-year yield. For the 10-year yield, still like these equal highs up here. And then for the 5 years, still seeing the same thing. So back to the T-bonds themselves. Because this is trading lower, again, yields are going to rally, and that's how I've known dollar was going to continue bullish. Even in the face of all the news headlines, the mainstream media, all giving the wrong information, I'm tuning all the noise out. I'm going right to the chase, going to exactly what smart money and informed investors are looking at. And that's exactly what I'm sharing here. So with this rotation lower we've been seeing in the T-bond market, again, I told you how I used it for currencies, but how do I use it for stock indices? For stock indices, what I'm doing is there's a 6 to 12 month lag in the T-bond market. So because we've been seeing the T-bonds crater, fast forward 6 to 12 months ahead, what are we seeing in the stock market? Cratering. Go back to the Dow, cratering. So I'm able to qualify these things by understanding intermarket relationships. And again, this isn't the holy grail. It's not just look at the bond market, because there's a lot of other things we have to qualify. But again, I'm just giving you guys a little peek behind the curtains so you guys can see what it is that's actually going into these analysis. As of recent, the past few weeks, I have been going a little deeper into the analysis itself and not just saying, because early on I'd just say, okay, target here, here, and here, and this is what would invalidate that. And then obviously it would deliver and it'd be lovely. But now, since I am planning on going into the private training space, doing mentoring, I do need to start showing a little bit of the skill set and the prowess behind why I'm calling these markets and how I'm calling them, so that you guys can see there's a lot more to it than, okay, this is where we're going, here, here, and here. Yep, stop loss above this level or invalidation level. There's a lot more to it, and I'm just giving you guys a little bit of that behind the curtains peek into what it is I'm using to call these markets. So again, with that out of the way, again, just sharing how I'm also using this to qualify indices as well. But back to this. So rotation lower, finally puncturing these equal lows, and here smashing into those levels handsomely. And then again, it's reasonable to see the market retrace or consolidate after seeing an enormous run lower. So with that, I am still bearish long term. So don't get that twisted up. I'm still expecting lower prices, more specifically to this 50% here of this inefficiency, and then all the way to the downside. And then how we trade there will communicate to me whether or not we're going to continue cratering, which is what I'm expecting in this market. So down to the weekly chart. So here we have the weekly bullish order block that we touched on last week. We traded up into that level here, which is permissible. Again, we just hit a key discount level, smashing lower. So again, it's reasonable for the market to consolidate or retrace. So I said it was permissible for the market to retrace up to the bearish order block. And then we hit that, and that's where we pulled off the high and closed the week. So I prefer to see the market stay below this bearish order block longer term because that'll give me confidence that this market is exceedingly weak. I wouldn't want to see us get above that because if we do, then we may have to see a bit of a deeper retracement, which again wouldn't be out of the realm of possibility given the huge move we've seen in this market. But I'm not preferring that. If I want to see this market stay exceedingly weak, we should stay below this up close candle or bearish order block. So down to our daily chart, let's go ahead and get into this. So daily chart for T-bonds. Yeah, so a lot of lipstick on the chart from the previous months, but wow, just beautiful. I leave it on there as a reminder because like I said, it never gets old, never gets old. All right, so let's zoom in on the price action we're trading in now. So we traded up to this balanced price range. Remember I told you guys that we hit that like a brick wall. Why? Because it's balanced price range, and then we rotate lower. So once we smash through this down close candle or bullish order block, what does it become? A bearish breaker. So we traded into the discount level once, twice, three times, making lower lows. And then we see the market pull back into the range again, which is reasonable. So on the daily chart, I took our attention to this inefficiency here and this bullish breaker. I said that I prefer to see the market stay in the lower 50% or below mean threshold of this breaker and this fair value gap. Why? Because then that would communicate to me that the market is still exceedingly weak. So I do not want to see the market get above this breaker. If we get above the breaker and close above this fair value gap on a closing basis, that's going to communicate to me that we're going to likely need to see a deeper retracement. And then I may look for these equal highs here. But again, I'm not favoring that. That's just my invalidation level for the bias I'm sharing. What I am expecting moving forward is I do want to see the market sell off from these levels and aggressively expand through this low here. I want it to displace through it and then attack the downside objectives here. And third target on the week would be here. So again, first target, previous week's low. Second would be consequent encroachment. Through that with animation, you could split this into quadrants and get the lower quadrant here, and then that would be a nice third target to round out the week. So that's what I'm expecting. Again, not going to be too demanding a price in this asset because of what we've already seen. But gun to my head, that's what I'm expecting moving forward. And then I also gave you guys the invalidation level and then what I would look for in the event that we do see that. So I touched on the yield market. So we're going to continue seeing yields higher likely, and that's going to continue putting lift on dollar. So let's go ahead into Euro. I think I was on a 4-hour chart. So if I go into this week's analysis, just covering last week real quick briefly, we'll just do it on a 2-hour chart, get right to the point. So again, you guys know, am I bullish or bearish Euro? Obviously, we're bearish. There's no reason to be a bull in this market. So what did we see last week? So we opened the week here on Sunday, right here. So if we're bearish, we open Sunday, what do we expect? A manipulation, always. The market doesn't just open and start running. It's going to open and manipulate higher. So we see the opening here on Monday. So all this rally here, that's a Judas swing. That's a fake move above this high here, here, and here, these equal highs. Why is it doing that? Because if smart money like you and I were, where did I take our attention to? Again, these annotations here are directly from the callouts that I shared with you guys. Nothing was changed. I haven't been back to this market again because the crummy delivery, I don't really care for it. But even in this delivery, we can still have targets hit, which I covered here. So again, I gave these 4 targets on the downside for this week. We traded higher, made the high of the week when? Tuesday, London session, probably random, I know. And then we trade into the bearish order block here and then break down aggressively what targets did I share. These equal lows here and here. Longer term, I do suspect we get below these lows, but that's good enough to pay the trader. When's the low of the week form? Thursday, and then we pull back into the range for a little TGIF setup. So not the cleanest delivery, again, because we've been range bound in this market, but still doing exactly what we expect when we expect it. And that's what makes these concepts so great, is all the guesswork is removed. We're not guessing when our next setup's going to come. When do we expect the high of the week? When do we expect manipulation? All those things are solved for us. We already know exactly what we're looking for, when we're looking for it, and most importantly, how to take it down. And that's what makes our community so confident, because we know these things. We're not guessing. Most other communities, most other thought processes in these markets rely on luck, rely on being there at the right time. Whereas for us, we know it's none of that. And that's what makes people think, what we do is arrogant when it's not. It's just confidence. So again, market hitting those levels. So back up to the weekly chart here for euro. Let me go ahead and take those levels off, clean up the chart a bit. And again, I'll get to the questions here. So I'm going to look to get through the analysis here pretty quick, and then I'll get into some questions before we close out. So for euro, I took our attention to this breaker here. So this last down close, so high, higher, high. So this down close extending that through. So we've been consolidating inside that breaker, not able to get above mean threshold. So looking at that last down close candle, I'm looking at the 50% of that, extending that through. Look at the bodies all respecting that. That's beautiful. I like to see that. Now, refining this further, weekly fair value gap here in purple. Look at the bodies respecting that. Wicks doing the damage, that's fine, but the bodies tell the true narrative. So again, I'm still bearish on this market based off what we're seeing. And again, I'm just seeing this as a stop run higher into a short-term premium. We did trade higher, just short of consequent encroachment, or 50% of this wick, and we were unable to hit that. So that communicates to me that this market is exceedingly weak, and I will expect that moving forward. Again, my targets remain the same. Still looking for this low here. Through that low with animation, my attention goes to this huge buy side imbalance, sell side inefficiency here in discount. So daily chart, and then again, I get a lot of questions as to why I'm not terribly interested in the foreign exchange market. Because this delivery right here, look at this daily chart. That, in my opinion, is atrocious. Again, we can still have targets hit. I can still call these markets with pinpoint precision. But look at this daily chart. Contrast this to NASDAQ or S&P. Look at ES. Beautiful. Look at NASDAQ, or I mean even Dow. I don't like Dow. Dow is ugly in my opinion, just how it delivers. But contrast that to the delivery of Dow. So there's much better markets to trade in my opinion. There's much better markets to assume risk in. And in my opinion, it's just not Forex. But again, I know we do have a lot of Forex traders and you guys are comfortable in that market. So I'll keep calling it for you guys. But again, that's why my analysis has been limited, because of the delivery. I don't have any interest in trading a market that's showing me this. All right, so again, 3 drives higher, basically the opposite of dollar. And then we broke down. So I want to see this up close candle be a bearish order block, and I do not want to see the market get above that. Also using this weekly fair value gap, I prefer to see us stay below this, and I want to see acceleration to the downside, and I want to see this high remain intact. So that's what we're looking at for euro dollar. Let's go into pound. So weekly chart for pound. So pound is exceedingly weak. So we ran into this sell side here, which is nice. Looking for that, and then this inefficiency. So we repriced our targets, and then again, we entered a measure of consolidation. So we are staying below this weekly fair value gap here. Trade into it once, hit it once more, rejecting. So I am still going to continue looking for lower prices, and I do like to see this weekly fair value gap here, extending that through. Look at the bodies respecting that as an inversion fair value gap. So I want to see the market get below this fair value gap, use it as resistance, and then accelerate lower to these equal lows, and then eventually to this inefficiency. So I will be expecting acceleration lower on pound as long as we continue seeing that lift on dollar. So daily chart. All right, so daily chart for pound. Again, just in a sideways consolidation. Not terribly interested in trading this market, but still opportunity. Again, high of the week on Tuesday, low of the week on Thursday, a nice run below this low. So again, there's enough to find setups, but again, in my opinion, there's better markets to trade. So I did like to see the SMT we saw in euro and pound, so I'm going to cover that here. So here euro made a higher high, and then we see here pound failed to do that. So pound is indicating it's weak, and again, as we would expect, it would likely be the sixth sister because euro has already repriced these lows. So if we go back up to euro, euro is already below these lows, whereas pound is still going to likely have to catch up. So I will expect nice animation on the downside for pound, looking for it to catch up to euro. And then that's further confirmed to us algorithmically, seeing that it failed to make a higher high. So again, the algorithm is constantly communicating what it's doing. You just have to get proficient in learning the language. And again, it takes time spent with somebody who knows what they're doing to learn this skill set. So looking at pound moving forward, discuss how I want to see this weekly fair value gap act as inversion. And then I want to see acceleration lower through this low. Through that, my attention goes to this sell side here at the 102 big figure number. And then through the 102 big figure number, my attention goes into this inefficiency. And then through that, I like these equal lows here. So that's what I'm going to be looking for on pound moving forward. Now let's go ahead and get into stock indices, and then I'll take some questions. All right, let's go. All right. So monthly chart for ES. So weekly, or not, excuse me, weekly. Monthly fair value gap for E-mini S&P. So why is this labeled inversion? It's inversion because we're bearish on this market. I'm not expecting us to trade down into it, find support, and trade higher. I want to see us trade down below it, use it as resistance, and go lower. How did I know that? Look at this candle close. You see how we closed below it? And then as we trade into it, I'm already expecting this to be a suspect rally. And then again, we'll cover that in the lower time frames and as to how we were all over that. But then remember what I called last week, how we were expecting the remaining distribution of this monthly candle to occur. Again, which is expansion lower. Into what levels? Are we looking at random ambiguous zones? Absolutely not. Boom. Sell side liquidity on a monthly chart, bagged and tagged. Trader has been paid. So that's what we saw here on monthly chart for ES. Still expecting much more downside to continue in the S&P. We'll go ahead and look at the continuous contract. Go ahead and clean that up. So again, I'm expecting us to get below this low here. And then through that, I like last year's lows. So October lows, I suspect we will smoke those moving forward. So still seeing much more downside in the S&P market, or really indices in aggregate. So that's what I'm looking for on a monthly chart. Let's go and drop into the weekly. Again, I'll touch on NQ. I know we have quite a few NASDAQ traders. All right, so NASDAQ, my target was this monthly fair value gap. Midpoint here. Falling just short of that, but again, getting close enough, good enough for government work. Hitting that midpoint, and again, longer term, I'm still expecting us to reprice down to the low end and then accelerate through that for these equal lows in here. So a lot more downside to come in stock indices, in my opinion. So weekly chart for E-mini S&P. We trade higher into a premium. Break down here through the bullish order block, confirming to me that we're seeing a change in state of delivery. Hit the weekly fair value gap, sell off, break through this low aggressively, creating an inefficiency. So remember what I was taking our attention to right here. Again, I knew the market was just going to go higher to go lower. That's how the market makers operate. It's their MO. It's just what they do. If they're going to reprice this thing to these levels that I was taking our attention to months ago, they're going to have to sucker longs in the market. And again, I'll go into how the commercials hedge and all that on the daily chart. But for right now, I'm going to want to touch on the specific signatures I called our attention to, which was the midpoint of this inefficiency. Remember the specific words I said. I don't want to see us get to midpoint, because if we don't get to midpoint, that communicates to me that the algorithm is exceedingly weak. And then if we leave some of this inefficiency open, I can treat that as a breakaway gap. And then I have further confirmation that we're going to see aggressive acceleration into my downside targets. So again, no mystery as to why stocks are cratering. And again, we've been all over it since, again, that rotation into August into the fall months. So moving forward, my targets longer term is still the remaining portion of this weekly inefficiency here through that low. We have quite a bit of inefficiency here. And then through that, I like these equal lows here. So we still have quite a ways to go to satisfy the remaining portion of my targets. So that is what I will be expecting. And I do see us there before the end of the year. I do expect we reprice to these levels before December 31st. Again, nothing to bet the farm on, just what it is that I'm expecting in terms of timing aspects moving forward. All right, so NQ, I believe that's everything I wanted to cover. All right, let's go to NQ. So bodies remaining below this volume imbalance. So I shared the volume imbalance here and the fair value gap. I said I want to see the bodies remain below that. Again, wicks can do the damage, but bodies tell me the narrative, and then we see the rotation lower. This candle opens, manipulates to a random level? No, previous week's low. And then that creates our immediate rebalance, which means that the algorithm is not allowing for a fair value gap, confirming to me that the market is exceedingly weak, which is why we saw the delivery we did. So again, immediate rebalance, smashing lower, giving up the ghost, repricing that weekly fair value gap I took our attention to. And then through that, I took our attention to the weekly volume imbalance here. And then that just about rounded out the low of the week, and beautiful precision there. So that's what we saw in NASDAQ. So I'll still continue to expect to see lower prices across all the stock averages moving forward. So my downside target on the weekly chart will be this weekly fair value gap in here. And then through that level, I like this down close candle, a bullish order block as a downside target through that. And again, longer term on NQ, I like these targets here. So for those of you guys that sat through the entire presentation, I'll go ahead and get into some detailed fib projection theory, how I use it in concert with what I'm already looking for. So for those of you guys that made it all the way through, give you guys some free game here. So let's look at the fib projections from this high to this low. -3.5 aligns right with those equal lows right there. Boom. So that's one confirmation. I'm going to measure the breaker for fib extensions. -6.5 right on that level. Perfect. And now for this swing, -4 aligns perfectly. And -4 is a specific fib projection I look for in certain contexts. Again, more on that later. So I just measured fib projections 3 different ways, and I'm seeing what? A lot of convergences around the low that I'm already looking for. I'm already expecting it. So that's what makes fib projection targeting effective. And using these fib projections, this is why my targets get hit. Because I'm not just calling levels or pulling them out of my rear. I know where the market is going to deliver. I know where the algorithm's likely going to want to reprice into. And then I'm looking for algorithmic convergences. So when I'm pulling these fib projection targeting, it's not just random levels. The algorithm is very complex and it's very, very specific. So for those of you guys that know how to read it, know what you're looking for, you're able to confirm all these things in the marketplace. So because I'm seeing algorithmically that all these fib extensions are aligning with that level that my analysis is already calling for, it gives me a lot of confirmation to hold for those levels. And then again, for those of you guys that have been following my work these past few months, you guys know each of these rallies here, we call them as sucker rallies. So suckers are buying this market here, suckers are buying it here, whereas what are we doing? We're selling short here, selling short here. Why here? Why not? Why am I not assuming more short positions down here? Well, let's look at the dealing range from high to low. All these entries were above equilibrium in a premium. So as long as we're in a premium, I can keep adding the new positions. Once we get into discount, I don't accumulate new short positions. Now I'm distributing. So as we're trading below this low here, I'm closing out 30, 40% of the long positions I'm assuming here and on this rally here. So again, like I told you guys several times, and I think each of the times I discussed that this goes way past just trading. I'm an investor as well. So if I'm seeing long-term opportunity, you best believe I'm going to position myself for that. So as we're selling into these rallies here, I'm telling you guys, what am I doing with my funds? Again, not financial advice. I'm not a financial advisor. This is just my opinion and education. But I'm selling into these rallies here. This rally here, I'm selling into that. Why am I selling into that? Because I understand that they're going to reprice it lower in the future. So again, a little bit of insight there. And this stuff just rolls off the cuff. I don't even plan on discussing it. I'm like, I'm just going to go in there real quick, just tell them where I think the market's going, get them to the point, take a few questions, get going. And then here we are 42 minutes later, right? I can't help it. All right, so daily chart for S&P. So again, we traded up into this fair value gap and then this fake rally here. I'm going to go ahead and touch on that real quick. So again, you guys know we've been calling this thing lower ever since we got the rotation lower up here. And again, you guys can go back to those videos and go into all the why as to why we saw the rotation lower. But what I do want to cover is that as these markets are rallying higher here, so ES, while these markets are rallying, like we have been establishing short positions on these rallies, smart money or commercial traders or aka the liquidity providers, on these rallies, they're selling short into. This rally here, they're selling short into. Smart money sells when the market's rallying. Why? Large funds, hedge fund traders, fund managers, they are looking to buy these rallies. So what is the liquidity provider going to do? They're going to provide that liquidity to those fund level traders. Why are they going to sell short inside this fair value gap? Why are they going to sell short above this swing high here, here, and here? Because they know, like we did months in advance, that they were going to reprice this stock market below these equal lows in here. So as it's rallying, they're selling into that. As it's rallying, they're selling into that. Just like we had been. Because it's all rigged. They're taking it to these levels for very specific reasons at very specific times. Look at the high of the week here on this week. So going 2 weeks back, what day is that high of the week? Tuesday. Hits consequent encroachment, sells off, probably random. Right here, Monday, what day is this candle, the high of the week? Tuesday. In a fair value gap, expands lower. Again, probably random. These things are rigged. It's scripted. All these phenomena that are repeating in the markets can be predicted. You just have to know what you're looking at. So looking at last week's trading, and then we'll go ahead and go into my targets and my expectations for this week. We have the measuring gap here. Why was this a measuring gap? Because I did not want to see it fill in. So again, I'll touch on that in a moment. I'll come back to that. Trades up into this fair value gap, Tuesday, high of the week, sell off. Why this fair value gap? Because there's a breaker here. So because there's a breaker and a fair value gap, I don't even want to see this inefficiency traded to. Ooh, light bulb moment. So for a lot of you guys that have been with us for some time, you understand that that is a repeating phenomenon. So I was asked several times this past week, looking at this dealing range from high to low, well, why don't we see the market trade up into a premium? Isn't market supposed to go into premium before we go lower? Not if the market structure is suggesting we don't need to go to a premium. Like I told you guys, the damage was done here. Retail traders have been stopped out here and here. Now they're just going to send this thing to the floor. There's no reason to take it back up to a premium. They've already offered a premium once, twice. Now we're in discount here. So the market's going to enter the expansion phase. It's going to aggressively run for these lows. Why? Because smart money wants to distribute it there like we do. We want to distribute our long positions below these our short positions below these lows. So the market's going to aggressively expand into that because it wants that liquidity to be there. Fund traders, they're not stupid. They may not know what they're doing, but they're not stupid. Just like we know, if the market's trading towards our stop loss, it's more than likely going to want to reach it and swallow it up. So fund level traders are also trading with that same fear. So as the market's getting closer and closer to their stop loss, the market's just going to accelerate into those levels to absorb that liquidity while it's still there. They're not going to give them an opportunity to pull those orders because smart money has to distribute those short positions that were accumulated at all these premium levels. So again, there's levels to this, folks, and I digress. So let's go back into my targets for this week. So again, we finally got the nice delivery below these lows. So the market maker sell model has been complete. So on the sell side of the curve, market expanding through all these discount levels. So longer term, I do like this weekly fair value gap here as a downside target. And then through that, I like the equal lows here on that from that weekly chart that we looked at. So still expecting more downside. Again, I don't think we're going to likely reach that. I mean, we could reach it this week with everything that's going on in the world, but I'm trading in that direction. So again, I like this liquidity void in here. We have this huge void. So let me go ahead and mark that out. Make that purple. So liquidity void in here, that's going to be a strong draw for price. And then I want to see how we trade when we get there. So first target on the week would just be previous week's low. Through that, I like the liquidity void. And then next target would be the midpoint of that liquidity void. And then all the way through that, I like the low end of that weekly level here at the 4058. And then again, animation through that takes us into the sell side below here. So that's what I'm looking for in dollar. And then again, I said I'd come back to that measuring gap. I'll go ahead and cover that now. So inception, where I think the move is beginning, where I think we're going right here, these equal lows. So at 50%, what am I expecting? I'm expecting the market to consolidate and run stops. Here we ran stops. So again, like I said, all this is scripted and rigged. So I know that the market's going to consolidate and retrace. So when I'm calling for this retracement higher, it's not just that oh, well, the market could retrace. Do you guys ever hear uncertainty in my voice or plan A, plan B? Never. It's I'm expecting this, but if it doesn't do that, then I will look for this. But it's never 50-50 because there's confidence in the things I'm calling. So when we hit 50%, I'm already expecting, not reacting. I'm expecting a consolidation and a run on stops. Why? This is the last bus ride for smart money to get on short ahead of the expansion lower and the stock market cratering. So at 50% here, which is also that equilibrium, I'm going to go and take that off. What else is there? A fair value gap that I qualified as a gap that I did not want to fill. Why? Because if this gap does not fill, then that confirms to me that it's a very strong likelihood, again, never guaranteed, but there's a strong likelihood that the market's going to want to reprice below these equal lows here. So I'm also using everything the algorithm's giving, everything it's providing in terms of confirmation, signatures. I'm reading into all these things when I'm calling the markets for you guys. And again, that's why the precision that I'm providing here is unmatched. And again, low resistance liquidity run here. Why? Because it's the second stage distribution of the market maker sell model. So this is ICT's favorite model. Why? Because it delivers in a low resistance liquidity run fashion. So it's not like up here where lower, higher, lower, higher, lower, higher, lower, higher. It's just going to run aggressively. That's low resistance. Not resistance in terms of support and resistance, but low resistance in terms of it has no struggle to get to the levels we're looking for. And then again, that's why we saw the lower repricing last week as a slam dunk. And again, we repriced into those levels. So shared my targets, gave a little bit of a price action clinic. So we'll go ahead and keep this thing rolling. Daily chart for NQ. Again, Tuesday high of the week, that immediate rebalance that we discussed. We'll go ahead and take that off. Volume imbalance here. Again, look at the bodies respecting that. Rotation lower. What I say about these equal lows in here. I don't just want to see the market poke into it and then retrace deeply. I want to see the market smoke those lows and not look back. Why? Because then if we displace through that low, that confirms to me that we still have much lower to go. So another confirmation into how I'm probing order flow. So we repriced the low end of that weekly fair value gap, and then we traded into that weekly volume imbalance here with the two blue lines. So I know there's a lot of annotations on the chart, but there's a lot of things I'm trying to conceptualize and bring to your attention. So we hit that low, but more specifically now on the daily chart, we refine the targets further to what level? This liquidity void here. Why? Because I covered when we were all the way up here. That's a very strong algorithmic draw if we're already calling for that in our analysis. So while we're up here, we haven't even taken these lows yet. Where am I taking everyone's attention to? All the way down here. Boom. Algorithm reprices right into those lows. So going into this week for NASDAQ, again, I'm still favoring lower prices, but this puts me in a bit of a predicament as an analyst because, again, we've already hit several levels. Looking at S&P, we've already repriced the market maker sell model. So while I still do expect lower delivery longer term, are we just going to continue smashing lower or do we see a retracement? That's what I'm weighing out right now. So because I don't have that clarity, usually I'll drop down into an hourly chart. I'll share with you guys, we're going to go up to this fair value gap into Monday, into Tuesday, and then we're going to reprice lower. And then again, we all laugh about how it's random after the fact. But I don't have that going into this week because of several factors. We've already repriced into several discount objectives, and we're overextended on the downside. Not overextended in the sense that it can't keep falling, but we're overextended in the sense that it's plausible to see the market retrace. If it does retrace, there's very specific levels I'll be looking for, which on S&P will be this daily fair value gap in here. So if we retrace into the daily fair value gap, I prefer to see us accelerate lower from here. And I don't even want to see this inefficiency filled in, because if that's left open, again, that's going to confirm to me that this market still has a long way to go lower. Same thing for NQ. We can trade higher into the volume imbalance here and fair value gap, but I do want to see the market aggressively rotate lower if we do that. But again, that's not even necessary because we're so close to these sell side objectives down here. The market could just aggressively continue expanding lower. And with the climate that we're seeing right now around the world, nothing would surprise me anymore. So again, I'm going to have to wait for a little more information Sunday going into Monday for the for me to have a clear read on what that weekly range is going to look like. Man, Abraham, you got a lot of work to cut these, brother, for next week. Just realized, man, I'm kind of bouncing all over the place. So again, yeah, looking at that daily fair value gap, I'm expecting that. But again, I shared why I'm going to be a little cautious, because we could retrace or we could expand lower, but I'm going to have to see how we trade Sunday going into Monday for that insight. So for NQ, downside targets would be previous week's low, repricing the remaining portion of this liquidity void, and then through that, I like the sell side here and this weekly fair value gap in here. But again, we should not get above this fair value gap in these 2 consecutive down close candles for NQ. And then for S&P, same thing. This up close candle, bearish order block, should not be violated. I prefer to see us not even trade up to it. So with that, it's going to go ahead and wrap up my analysis. I know it went a little longer than I was expecting, but I'll go ahead and take some questions now. Pedram, I learned a lot from you. Thank you. I appreciate that. Nia, thank you for your time. Absolutely. You being FOMC also. Yes, non-farm payroll, FOMC. Absolutely. All right, I'm going to go ahead and just look for member questions. Just quite a few questions here. I was asked about USD CAD. I'll go ahead and take a look at Canadian dollar. Only because I touched on it last week, and to put it lightly, we murdered it. So let's go ahead and look at Canadian dollar. We'll start at a daily chart because there's nothing more for me to look at. So Canadian dollar, or dollar CAD, I took our attention to the equal highs here and here. So I said that for this market to remain bullish, last week I said we should remain above this bullish order block. We open Monday. What do we expect? Drop lower. Retail Rick thinking he's missing the next drop. They're getting short. Smart money's buying that up at a random level. Absolutely not. Looking at this last down close, bullish order block hits that level. What time? 2 of the week. Bam. Right up into the buy side here and here. So that's what we saw last week. So all over USD CAD, actually really nice delivery. So currencies with dollar first, they're going to deliver very nicely to the upside. Dollar yen, dollar CAD, dollar Swiss, all those are bullish because we're seeing higher prices on the dollar index itself. So through this high, I like this high here for Canadian dollar. And then on a weekly chart, yeah, so we have unfinished business above this high for Canadian dollar. And then through that, no real interest after this high. So after this high, the crystal ball goes dark, but that's what I'm looking for dollar CAD. David Vega, would you be able to refer a past video where you explained how yields help your analysis? Every week, brother. Every week. Never mind. Okay. Got you covered. Jonathan Lee, what about FOMC rates day? Would you trade that day? So for FOMC on Wednesday, I don't trade ahead of FOMC. So I'm going to have my business wrapped up by Tuesday. For FOMC trading days specifically, I do come into the market around 145. I like to see what they do going into 230. And then again, we expect that typical 2-stage delivery in FOMC. And that's typically the macro that runs on that news event. So that's what I'll be looking for. I do trade it sometimes if I know what I'm looking for and the market structure is clear to me. But again, it's not something I would recommend the new trader to risk capital in. Definitely you want to be conservative on those days. You'd prefer to stay flat just because the underlying risk on those days. And again, early on in my career, I've done a lot of damage to myself on those days. So that's why I am being a good steward here with my influence and hopefully sharing the importance of being a responsible investor. So yeah, I can trade after 2:30, after 2:30 going into 3 is when I typically like to trade FOMC. Amy Moore, let's look at Dow and crude oil. Amy, I believe you asked about Dow last time. I trust the analysis did you well. Man, Dow just cratering. All right. So Dow, again, we covered how we traded into that fair value gap and then we traded lower. So remember what I said about this weekly candle. We just got to aggressively expand lower. I took our attention to the sell side here and this inefficiency. Daily chart, refine this further. Inversion, fair value gap here, extending that through. High of the week on Tuesday. Again, also trading into a bearish breaker. So we hit that Tuesday. What time? When we expect the high of the week. Rotation lower. So I gave the target being previous week's low here, or this level here. And then covering second target, oh yeah, was the rejection block here. So I gave the lowest body as a second target. So we repriced into that nicely. And then I shared these equal lows would likely be next on the agenda. And we fell just short of those. But I expect the market to clean that up going into next week. And then longer term for Dow, through those lows, again, I like this inefficiency. And then how we trade there will be influential. But longer term, I'm expecting Dow to trade below this low. So that's what we're seeing on Dow. We'll go to the daily chart. Yeah, so same thing. Equal lows there. I like that. So I'm still expecting Dow. Yeah, we still got a long ways to go lower on Dow. So I'm going to expect that to continue accelerating lower. All right, so I see a lot of... all right, let me go ahead and get to the members. Sorry, guys, I'm preoccupied with a few things I know I wanted to cover beforehand. So U.S. oil, I did want to cover crude oil. So we're still banging around inside this little range here. We traded down into the bullish order block as I covered, saw a nice rejection or higher. And then we traded back down into this weekly fair value gap, and we saw a nice reaction higher. So fair value gaps can be reclaimed. We can trade back into it, but I would not want to see us get below it. So for right now, we're just kind of no man's land with crude oil. If we drop down to a daily chart, this is not really doing much. So this isn't a market I'm terribly interested in trading, again, just because it's highly manipulated right now, considering the world events. So as long as we remain above this bullish breaker here, which is this up close candle, I expect continued upside on crude to take out this high here and here. But again, it's heavily manipulated because of everything going on around the world right now. Anita, gems as always. I appreciate that, Anita. Thank you very much. Outside of the smart money reversal manipulation leg, how do you know which swings to use for fib projections? Yeah, that's not something I'm going to cover here. That's something that is extremely detailed, highly technical, and that's something that you need to spend time with me to learn. So that's something that will be covered at a later date. More specifically, probably in private training. Jay, for DXY, measuring the daily 3 down close. Let me go to the dollar index. Daily 3 candles. So measuring the last 3 down close candle. Fib projection. It also aligns with constant encroachment of the wick right there. Okay, so it aligns with the weekly constant encroachment of the wick. Awesome. Yeah, I got you, Jay. Yeah, so there's a lot of different ways to pull fib projections. That's one of them. You can measure order blocks. There's tons of different ways to get fib projections. I use a myriad of them, but I do have to know what I'm already looking for, and then it's just an additional confirmation. It's not a be-all, end-all. It's just something that gives me precision in terms of targeting. And again, that's why it's usually my targets that are ones that are being delivered into because of everything that's going into my analysis. Latrice, talk your stuff, Dylan. Awesome. Thank you. Jesm, did you learn this with ICT? Yeah, absolutely. ICT, and I had other people that I learned and studied from. I've learned from a lot of people, but credit goes to ICT. Absolutely. Anita Lowe, we appreciate you, D. Taking your time to do this is priceless. Awesome, Anita. Thank you very much. Denisha, only 45 minutes. We appreciate the info you drop here. Thanks, Denisha. I appreciate that. Tayeb, can you give an example of market maker model original consolidation? Yeah. Easy. Daily chart, S&P, and we called it live. So original consolidation right here. Smoked. Boom. And that was my last target on the week. Again, probably not random. The song machine's in your bag. I'm always in my bag, brother. Back to the hooping days, and now as a trader, always in my bag. U-Bean, second stage distribution. Absolutely. That's funny you said that because I actually covered that there. So we're on the same page, brother. Olawale, thanks, Dylan. You answered my question. Awesome, my man. David Vega, thank you for the information, brother. All right, U-Bean, member question. Can you go a bit more into when you could see one shot, one kill move on both GU and indices with FOMC and non-farm payroll this week? Yeah, that's a great question, U-Bean. And I think why you're asking that is because positioning yourself in front of non-farm payroll and FOMC is probably the worst idea anyone could possibly have. And again, you just want that straightforward honesty. Those aren't the weeks you want to typically do one shot, one kill. Let me show you what easy one shot, one kill trading looks like. So this monthly candle, right? We open, manipulate, expand. So I'm expecting this candle to do what? Expand lower. When's it going to do that expansion? The last 2 weeks of the month. So let's drop down into our weekly chart. So here we have the first week of the month, second week, so accumulation, manipulation, second week, distribution, distribution. So I covered here that the high of the week formed on what day the last 2 weeks? Tuesday, here and here. This is when you position yourself for one shot, one kill. Not after the targets are already hit and we're going into non-farm payroll and FOMC. That's how you trade one shot, one kill. You have to understand what that monthly candle is doing. You have to wait for the premium to be traded to, wait for the damage to be done, and then position yourself for the distribution. That's how you trade one shot, one kill. And again, more on that in private training. At GamerAt, I love you. I appreciate that. What do you look for in terms of daily? Okay, I got to go ahead and get the member questions. If not, I'll be here all day. Gaurav, good morning, Dylan from Brisbane. Awesome, Gaurav. Thanks for joining us, brother. Happy to have you. All right, let me go ahead into the questions. James, I will have all the details on private training and mentorship that will be solidified within these next few weeks going into November. And again, training is not going to open till January. So we're going to start the enrollment period come November to give everyone time to prepare financially, schedule their life so that they can acquire the skill set. So I'll give everyone plenty of time in advance to prepare themselves financially and mentally as well for the mentorship process. Anita, hit that like button. Thank you very much. Thank you very much. Gaurav, can you take a look at gold for me? Thanks as always. Absolutely. Yeah, I got you covered. Now I'm going to take a couple more member questions, and then that's it. I got to get going, guys. So got a family dinner to get going to. So let's go and take a look at gold real quick. Let's go to ZAUSD. Forex.com. So go up to the weekly chart. So my interest in gold, you guys knew when we were trading lower, I'll just drop down to the daily chart. My attention was on these equal lows in here as we were trading lower. But come wartime, Middle East, saber rattling, all types of war threats, all kinds of things like that. Again, that's going to throw a wrench into everything we're looking at. So this here is manual intervention. So we were looking for these lows, but as soon as everything starts popping off, again, manual intervention, they start repricing this based off maximum pain, just to be honest with you. So they're trading it higher. They took out these equal highs here, smooth highs here. So that was an easy draw for gold. And then we saw the market rip into those levels. So back to a weekly chart, these equal highs here, this just jumps off the screen to me. I am expecting them to want to reprice it above that. So personally, that's what I'm going to be expecting moving forward until something drastically changes. But again, because of the highly manipulated environment, because of everything going on around the world, gold is a highly manipulated asset and things can change very abruptly and quickly. So again, it's not an asset I prefer to trade, but again, we can still call it out. And moving forward, my attention in gold would be above the equal highs here. Daily chart, go ahead and refine that a bit more. So you have down close candles, bullish order block. So I'd want to see us stay above that. Here we have a inefficiency extending this through. So I'd want to see us get above it, use it as support, like a launch pad higher into the buy side here, Next target would be the rejection block, which would be the highest body. And then through that, I like this swing high here. So that's what I'm looking at on gold. What changes this is if we get below this bullish order block. So if we get below this here on a closing basis, then we likely have to work down into some of this inefficiency here. So that's what I'm expecting on gold, and that's also my invalidation level. So Gaurav, hopefully that covers your question, my man. Momentum trader, not a member, but long time day one here. So how do you keep expecting market maker sell model to continue versus turn into a market maker buy model? Higher time frame, intermarket analysis. Again, I've already covered over 10 confluences as for why I was looking for lower prices on S&P. So it's not just one thing. It's a myriad of things coming into alignment that make high probability. It's the bond market. It's the fact that the dollar's cratering. It's the fact that the U.S. economy is abysmal, regardless of what the news says. All those things come into alignment. Nothing is good for the stock market right now. If we look at where we're at on a monthly chart, long term, this thing is in la-la land. It has a long way to drop. So you see how it takes the stair step higher? Well, now it's about to take the elevator ride down. So it's a balance of understanding a lot of different factors, bringing them together, and that's what makes high probability trading and analysis. So that's how I'm able to qualify these things. But the key to answer your question, momentum trader, is you have to understand that higher time frame draw on liquidity. Where are we going? And then that's what tells me that we're going to be cratering for these lows here, not to turn into a market maker buy model. I need a live stream after FOMC would be awesome. Yeah, I'll see what I can do. A famous trader said about non-farm payroll, first move is the wrong move. Absolutely. Miha, thank you for your valuable time. I can't wait for your private mentorship. I'm excited to get to work with you guys. Thank you very much. Yan, ICT is always saying when the likely expansion of the weekly range is not clear, he can go for intraday scalps. Have you an approach for that? Yeah, so I tell you guys when we're in a scalper's market, and I tell you guys when we're expanding. Right now, targets are clear. I know where we're going. Monday into Tuesday will more than likely be a scalper's market because I have to determine what the weekly range is going to look like. Once I know what the weekly range is going to look like, I can hold for one shot, one kill. I can hold for the entire daily range. You guys saw I did that last week on crude oil. And then I went on a live stream and did a price action clinic covering why I did that. And then I took down a monster trade on NASDAQ this past week, holding for the close, understanding that because we're bearish, we're going to close near the low. And when you're pulling down trades like that, I'll say it like this to keep it humble. You don't need many of those to do well. And that's the basis for the trades that I'm taking. Olawale, see you in private training. See you there, my man. AB, the pre-market analysis as the week develops is always nice. Appreciate whatever you can share. Absolutely. Amy Moore, thank you very much. Appreciate you joining us. Earl Garrison, awesome session, Dylan. Appreciate you, my man. All right, so let me make sure we don't have any more member questions. I'm going to go ahead and get going. Were you in ICT's private mentorship or did you learn from YouTube/Twitter? I learned ICT. I'm a YouTube student, and I learned from other educators in the space as well, but primarily from ICT. You being open, high, low, and close on the month? Absolutely, yeah. So you have to understand that monthly candle, and that's what's going to give you that clarity for swing trading. You being, thank you, boss. Have a great week. You as well, my man. Manas, GBP, USD. The recording will be uploaded. I already covered pound. Latrice, thank you, Dylan. Great session. Thank you for joining us. How long will the mentorship or training last? Yep, so it's going to be a complete detailed mentorship. The training itself will go for 6 months, but the proper full mentorship will go 1 full calendar year. That, in my opinion, is how long you have to spend with somebody to acquire the skill set. It's same thing like a trade. Whenever you're learning a trade, you have to spend time with whatever it is you're learning. If you're a doctor, lawyer, engineer, you don't roll out after 1 month or a 1 month boot camp and find profitability. I think all that stuff is money grabs. I think it's nonsense, and I don't think anyone is leaving these 2-week boot camps, 60-day trainers, and leaving with profitability. That's just not how this business works. You being what's usually on the menu for Sunday family dinner? Steak and potatoes today, so eating good tonight. Rich Carey, thank you so much. Dylan, you're awesome, brother. Have an awesome week. Appreciate you, Rich. You as well. Best of luck on your challenge, brother. All right, guys, so I'm going to go ahead and get going here. I appreciate you guys all joining us. Curtis, salute. Take care, brother. Denisha, take care, everyone. Stay safe. This is Non-Farm Payroll Week. Don't forget to hit that like button. Thank you guys very much. Please do hit that like button on your way out. That helps us out here greatly. AB, yeah, that's right. So we expect two-stage delivery on FOMC. The fake move is going to be the Judas swing, or the fake move, and then the waterfall comes crashing down usually on the second move. So that's how I trade FOMC and non-farm payroll. The same macro runs both of those news releases. Joe, thank you, Dylan. Anita, thanks. Absolutely. Yeah, the pleasure's all mine, everyone. All right, guys. So I believe I got to all the member questions. If I have not, reach out to me on the Telegram. I'll do my best to get to it. There's just so many comments. It's hard for me to get them all. So I just look for the little logo and I know who's a member, and I'll attend your question. So with that, everyone, I bid you farewell. I hope you all have a great rest of your week. Again, keep in mind everything that's going on around the world and the economic calendar, and do be cautious in your trading. Not fearful, but cautious. You do have to appreciate the risk. So again, with that, I bid you guys farewell. Hope you guys have a great rest of your week. Good luck and good trading this week.